In my last video, I drew 3 price paths on how price would move over the next 5 days, and it's been about 5 or 6 days since I made that video. The highest price path was supposed to only have permission to go about $27,000, $27,500 before the Sunday closure. By Monday, it could have gone higher, but around that Sunday closure, it went $1,000 higher. And now it went straight back down where I thought it really should have been, because July 1st, my target is around the 21,000 and change, 22,000. We still have a month to get there if that target's going to be hit. Plenty of time. But why did this go so much higher than what I thought it had permission to go? Usually when I draw 3 price paths, one of them over about a 5-day period, it gets priced pretty right, and none of them got it right. So let's dive in here, see what I missed. Let's get it. If I can hit my buttons right. Now I'm gonna zoom way into this bad boy. We're gonna check this out. Over here, I'm gonna put on my chart something I usually don't show for free YouTube, but I'll show you why I really didn't think it had time or the ability to go up that high that quickly. Is usually if I take price off here, these ribbons, the way these are my ribbons in that this is not an indicator you can just say, oh, you know, put it exactly like this. This took a lot of careful modification of the EMA bands on Tradingview for any new viewers. But anyway, so this is what I call 3-minute long ribbons. The rainbow crosses the gray or the blue and the gray line, what I'm highlighting here. Let's see if I can try that again. Blue line, gray line, rainbow. So a bullish cross up is what you're seeing here, with the rainbow going above both of those. And if I zoom out, the 5-minute at that time, so let's mark it off about here, was not crossed up. The 15-minute at about that time was completely down. The 30-minute at that time was down. The 1 hour at that time was completely down. The 2 hour was completely down. And price was below the dang thing. Like, it wasn't just down, it was below the band. So usually a 3-minute, so the only cross up was a 3-minute. And statistically, I mean, it is rare to get an 8% massive, I mean, a pretty massive move for Bitcoin in a bear market or a sideways market, whatever you want to call this. It's definitely not a bull market. But, and hopefully I don't have very many viewers who think we're leading into a bull market right now. The bottom could be in, it honestly is probably a 51 or slightly higher % chance at this point. However, but it's not too much farther than 50-50. Sorry to burst anybody's bubbles. But this, I mean, this type of move, when only the 3-minute crosses, that means something is going on. Either this was a fake out or I missed something obvious, okay? Because it's just not supposed to do that. Or this could have been, the downside could have been the fake out. But we already know it's not, because zooming out, price is behaving perfectly in the greater channel. So this is the point of control up here from the original channel when I first started this video. Go backwards, and this is the quarter line, and this is the bottom of it. And price is now below the bottom of it, just kind of like how I thought it was going to happen. All right, so let me take off these ribbons. So price is moving perfectly within. So this is the top of the channel, middle of the channel, bottom. It's moving perfectly, right? Now, does it look pretty normal just to use this as support, break below it, bounce here, then do a failure rejection pattern? Yeah, that looks pretty easy. And the failure patterns typically reach up to another horizontal resistance if it's a failure pattern above my lines. So what is that? Oh, right here. In this line, if I go back on the 8-hour chart, look what that bottom line is. Or the horizontal line. Look, this is from 1 year ago. This is April, this is June of 2022. And it did a failure pattern above the same line that it's supposed to use as resistance anyway. So looking at this channel, I mean, it looks like it's pretty normal, right? You go from this line being support, you bounce, you use it as a failure rejection pattern, the failure pattern goes to horizontal, and so looks good. And so I think I simply underestimated, what I think I did here was I underestimated Bitcoin's ability to become volatile over the weekend because it simply hasn't been doing that. It hasn't been volatile, right? But we had the debt deal, so politicians essentially let the news channels know ahead of time, we're going to have you publish articles about the debt ceiling deal being reached, but they did it on a Saturday. First off, when are politicians working on a Saturday? Second off, when does Bitcoin price move? And so so with my 3 price paths, I underestimated this over here just pinging off the bottom of the channel and then going up to the bottom, to the underside of the quarter line, even though that's 8%, and even though Bitcoin doesn't usually move over the weekends, I should have probably, my highest price path probably should have at least gone up to 28, up to the blue line, bare minimum. So I came up a little shy. I underestimated, the power of potential power of Bitcoin on the weekend, even though it is not very common. It's not happening very often. Also behind me, one thing that I could have gotten a little bit better, because I don't like it when my 3 price paths aren't very close to what exactly happens. I don't know. I just don't like it. I like to be very precise. And when you look at it this way, very similar idea. This is an origin line for new viewers. I can zoom out. Here we go. No, this is not an indicator on TradingView. This is not an indicator on TradingView, but this is my custom chart. Anyway, you can see what's going on here. Check out the years. All right, these are origin lines. And you won't find them on anybody else's YouTube channel on the whole internet. Okay. And this is an origin line here, but a lot of times there are 3 ways price can move on origin lines. They come down to them and use them as support. They come up to them and use them as resistance, but they can also go below them and use them as resistance. So support, they can use it as resistance, or price can do what? It can do a little bit of both. And so when it does a little bit of both, it just forms a fairly uniform channel, where they have the top of the channel is equidistant to the bottom of the channel from the middle point, which is the origin line. And so if you look at it like this, it already gave me the hint. It already said, hey, Tim, we have gone down this low. So before price ever got that far, I could have gone like this. I think this is about where I made the video. Right here. So I did the time machine button, and I could have said, here, I'll just delete that. Boom. All right, watch. What I could have done was, well, we already have this move over here. So if it's going to get hot over the weekend, I will simply go like this, and, oh, wait. I would have done it like this. I would have done it about like that. So I would have gone like this, and then made a new line, make it equidistant, and then said, okay, over the weekend, Bitcoin could maybe go as high as, so then I could have gone to Sunday, marked it off, and I could have gone. It has permission to go as high as $28,500. And then on the replay, and this should have been my highest price path. There you go. That's what I missed. Right there. And that was on Sunday. Look, it was Sunday. And so Sunday starts here and ends here. So I probably would have put it in the middle like that. So 28.4, 28.5. So I probably would have had it at 28.4, and it only went up to 28.485. That is what I missed. So again, whenever you try to do price analysis, you need to get to the point where if you do about a 5-day analysis or a week, like what's going to happen this week, you need to make 3 specific guesses. In a bull market, you need to do 2 what ifs, because weird stuff happens in bull markets, right? Like this is just a lazy day. Like this was a lazy weekend in a bull market environment. But so in bull markets, you need 5, the 3 most probable 2 what ifs. But in this sideways or bear market, you just need your 3 most probable price paths. But rigorously find out what you missed in the event that over that week, none of your 3 price paths were very close. And I get so specific that if I get the right price target, but I don't get the right shape, because I didn't see how price, like how the trend would be, or if there's like the weekly 10 EMA here, I didn't expect it to go straight up, then sideways, then straight up, because there's a weekly 10 here or something like that in the middle. I like to get the actual shapes right as well, but that would be, don't worry about getting the shapes right ahead of time. Mostly worry about just kind of lines. It can go up to here, and do a higher low over to this point, or my second guess is it goes sideways, down, and then up. And you may need to start making 3 guesses over the week, for example, just to practice, and then follow up with your guesses over that week. And then if none of the 3 hit, don't worry about the shape, but just with targets, then go over and find out what you missed, just like I did today. So hopefully today was, you can see that as good practice and something that you can implement within your own trading strategy and price analysis tool belt. All right, we'll see you all later.